everybody and welcome back. This is Swati Gupta, Chartered Accountant. In this video, we're going to discuss what exactly are the similarities and the differences between IFRS and US GAAP. What is their scope, where it is applicable. We'll also discuss some multiple examples in order to understand this difference and similarity better. Okay, so watch this video till end and I hope we are ready for this battle. Let's begin. Now, firstly, IFRS stands for International Financial Reporting Standard. Okay, whereas US GAAP stands for United States Generally Accepted Accounting Principles. Okay, now this IFRS is applicable in more than 140 countries, whereas US GAAP is followed only on US based companies, only on US based companies, or you can say in US. Okay, next we say that the IFRS is principle based, whereas US GAAP is rule based. Now, principle means it follows and it lays down general guidelines. It is not scenario specific. It is not any case specific. Whereas if we talk about rule are not generic. They are so specific. They are scenario based, case study based. Okay, they are situation based. And therefore, if you compare between principle and rules, principles are lesser in number, it can be condensed, whereas rules are higher in quantum, higher in number, and cannot be condensed. Okay, so because IFRS is principle based, lesser in number, why? Generic information, generic guidelines are given, and therefore we can say that it can be condensed, it can be concised. Okay, as compared to your US GAAP. It is vast, it is higher in quantum, and now IFRS provides multiple options, okay, to choose within, whereas US GAAP restricts and highly prescribes one specific rule, okay, and gives very less options, and therefore we'll say that we can conclude that US GAAP is rigid as compared to your IFRS. Okay, next. IFRS has an intention for convergence. This means for harmonizing. It has aimed to harmonize standards within multiple countries. Okay, for example, in India, you have heard that Ind AS is bought, is adopted, is converged from IFRS. Why we say that? Because IFRS says that okay, you can copy me. You can, as it is, adopt, or you can make some changes if required, if the situation demands for, if that particular country's environment, economic, legal, says so. Okay, so for example, in India, they have not adopted it exactly from the IFRS. Instead, they have converged. That means they have brought IFRS with some changes. These changes are known as carve in and carve out. Whereas if we talk about US GAAP, it does not allow convergence. Instead, it promotes, it highly prescribes divergence. It highly prescribes divergence. That means nobody can copy. Next, IFRS is issued by IASB, International Accounting Standard Board. International because it is applicable for more than 140 countries. Whereas this is FASB. F stands for Financial Accounting Standard Board. This publishes US GAAP, okay, and it is based to US. Whereas this is international. Globally, one entity, one committee is there which publishes these all. Okay, so there are two boards. IFRS is published by IASB, is issued by IASB, whereas FASB issues US GAAP. If you're clear with this, let's start up with some examples and lay down and exactly know what similarities and differences are there. Okay, so these are just a gesture or just a glimpse of the differences and similarities. For example, if you talk about IFRS, here option is given that whether FIFO, first in first out, or weighted average method can be followed as per the convenience, as per the situation demands. Wherein in US GAAP, the most preferable method is FIFO, and there is no option, and they can hardly apply weighted average method only and only if specific criteria that has been laid down are met. Okay, so they can apply weighted average only if specific criteria are met. Otherwise, majorly they follow FIFO, first in, first out. Here, they can follow FIFO, they can follow weighted average. There is an option given. You can see there is leniency in IFRS more. Next comes LIFO method, last in, first out. Okay, this method is prohibited in IFRS. Whereas if we talk about US GAAP allows it. It says, okay, LIFO can be used as a measure to calculate the costing of the inventory, of the closing stock. Okay. Next, research cost. Here there is a similarity. IFRS says that research cost can be charged to PNL, will be charged to PL, whereas here US GAAP also says, okay, charge research cost into PL. Next, if we talk about development cost, as you know, there are criteria, recognition criteria for intangible asset. It says that, IFRS says that if development cost meets recognition criteria, then you can capitalize. Otherwise, you have to charge to PL. Development cost, if it meets recognition criteria, then it can be added to the cost, can be capitalized. Otherwise, it has to be charged into the P&L. Whereas if we talk about US GAAP, it says that development cost, okay, can be capitalized, but there are very less chances, very rare chances. Okay, your criteria meets up and it has to capitalize them. There are high chances over here. Whereas under US GAAP, there are very rare chances, very limited cases in which it can be capitalized. Okay. Now, if you talk and compare about the PL, what does this impact? How does this development cost impact? Now, in this case, if it can capitalize very rarely, that means they are charging majorly their development cost to the PL. This means the profits are decreased. Whereas if we talk about IFRS, here they allow capitalization very easily. Okay, and therefore, development cost that is charged to PL are lesser, and therefore the profits, if you compare with US GAAP accounting, okay, and presentation, the profits are higher as per IFRS. Okay, here you can make a simple comparison. Now, research cost is basically the cost of experiments, multiple discoveries, okay, application of the knowledge. Whereas development is after you have done and concised and brought up a theory which is practical, which will be feasible, you try them out. You put this theory into application. You try out, you prepare, you construct what prototypes, okay, and test them. If they are successful, then you say that okay, this prototype can be taken up for mass production. Okay, so until and unless these prototypes and all are met, these types of costs are known as development costs. Until the time the recognition criteria is met for the intangible asset, that is, firstly, it is highly probable that from now onwards the economic benefits will arrive. Okay, the particular research has been successful, and now whatever is being produced will have some economic benefit. If this is probable and the cost can reliably measure, this means intangible criteria is met, and therefore from then and there you can capitalize, you can add to the cost these development expenses. Till the time it does not meet recognition criteria, it charges to PL. Okay, similarly here there are some conditions and some limitations, very limited exceptions are given wherein you can capitalize. Okay, next, now, if you talk about IFRS multiple times, repetitively, in different standards, ask for fair valuation. There are many different scenarios wherein IFRS demands fair valuation. Okay. Whereas, if you talk about US GAAP, it rarely and it very less requirement is there for fair valuation. Very rare. Okay. Next, let's take another example. Held for trading. Any investment you have done with an intention that you do not want to hold it till maturity, instead your aim is, your intention is, your purpose behind making such investment is to take the benefit of the capital appreciation. For example, you have taken at 100 and you are waiting that if the market goes up for 120, 130, 140, the difference you'll sell it and the difference will be your gain and you will take the benefit. These type of investments are known as held for trading. Now, IFRS says that if there is any investment in the balance sheet, in the statement of financial position, and it is held for trading, then you are required to revalue to their fair values at every reporting date. Okay, you are required to fair value them. Whereas held for trading is very rare in US. Okay, there are very rare chances that a particular investment will be held for trading. Therefore, there are very less chances that they will be fair valued. You see, the majority of investments are recorded, are relied on historical cost accounting. Okay. Next and last for today, IFRS does not have any specific category for extraordinary items on income statement. For example, if there is any unusual item, there is any new type of transaction, okay, it is abnormal, unusual, then you have to state it into the statement of PL and OCI. But therein you do not have any specific label, any specific heading or line named as extraordinary item. Okay, are you clear? So there is no specific line item. You add that particular unusual transaction, unusual income and expense into your PL. You show it separately, but there is no heading as such extraordinary item. Okay. Similarly, here earlier there was a separate heading of extraordinary item. There was a separate heading in the income statement as per US GAAP. Okay, but from 2015 it has been eliminated. Now here also, if you talk about today, currently, any PL or OCI statement of US GAAP does not have a separate heading known as extraordinary item. The unusual income and expenses are recorded separately but not under the specific label of extraordinary item. So this is one of the similarities. I hope this information and these examples are really helping you out. Okay, if you like the way that we are discussing in these videos and you want to cover entire IFRS and Ind AS, whether you are professional or a student, okay, then please don't forget to check out the description box. Okay, therein links are there. You can download the app. Courses are made in Hindi and English, both for professional as well as student. Okay, if you like, if you see, check the index, if you like it, if you find it suitable, okay, you can enroll for the same. Also, this app is available on Play Store as well as App Store. On Play Store it is named with Stay Ahead, okay, and simple mobile number and OTP is required for login. Whereas if you talk about App Store, that is for iOS, Apple phones and all, okay, there is app available with the name Class Plus. You have to use organization code HSGGO to log in with your mobile along with your mobile number. Okay, I hope this information is helping you. If you like the video, don't forget to like, share and subscribe. See you in the next video. Till then, take care, be safe.